A very good morning. These are the top business stories live from the Sky Newsroom. Donald Trump threatens sweeping new tariffs on China, Mexico and Canada on his first day in office. The head of Ofwat tells MPs that water regulation hasn't failed. Plus, getting Britain working. The government prepares to unveil plans to tackle economic inactivity and bring more than 2 million people back into jobs. Very good morning on this Monday, or Tuesday rather. This is Business Live with me, Darren McCaffrey. Let's start with that story that the government has announced an overhaul of the job centre as part of plans, which it says will get Britain working again. Let's get more details from our political correspondent, Serena Barker-Singh, who is in Westminster. Serena, very good morning to you. Governments have tried to reform welfare over and over again, stretching back decades. What is the Labour government trying to do this morning?
Well, they're trying to make a big deal of it. As you say, successive governments, previous governments have done this before. This is their big white paper. But essentially what they're saying is since the pandemic, departmental costs have ballooned. They estimate £100 billion could be forked out by the end of the Parliament. So they're eager to reduce this, and they're doing that in a number of ways. So they've had a package with £240 million investment to job centres. They also say they want to support things like mental health. They want to remove barriers, essentially, to getting people into work, but also helping people overcome some of the barriers. There are also, though, things like sanctions for young people who may not take up training or work that is offered to them. So it's a bit of a mixed bag. Liz Kendall was at a visit earlier today. This is a bit of a flavour of what she said.
I want to tear down the barriers to opportunity for people right across the country, including young people, because with 2.8 million people out of the workforce due to long-term sickness, that's bad for them and their living standards, it's bad for employers who are desperate to recruit, and it's bad for the economy as a whole. In order to get Britain growing again, we've got to get Britain working again, and that means a big new change to employment support.
So that's their message today. The opposition, though, are a bit wary of this. They're saying this is not anything that matches their manifesto commitment to reduce the welfare bill by £12 million, although they haven't said how they would quite do that. I think timing is also crucial. There's a lot of words of consultation and reviews in this white paper, but the government says that a big reform does take time. I think another thing to note, though, is also the change in employment that they made in the budget, the living wage, the national insurance premiums for employers, that might make it harder to recruit and stimulate more job opportunities. So I think it'll be a long time before we see whether this plan is really working.
Indeed, I think it will. Serena, for the time being in Westminster, thank you very much indeed, our political correspondent there, Serena Barker-Singh. Now, the UK introduced new sanctions against Russia yesterday, but there have been lots of questions over the last couple of years about really whether the sanctions regime is actually having any effect at all. This morning, MPs on the Treasury Committee are asking that question of directors from the Office for Financial Sanctions Implementation. Well, let's get all the details from Ed Conway, who has been across this story for a long time. Ed, what's your take?
Yeah, as you probably all know, we have the biggest range of sanctions that we've ever imposed as a country that have been implemented on Vladimir Putin and on Russia. It's a whole range of different things. I want to show you kind of one example of the kinds of things that we've been looking at here at Sky. In particular, one thing we can track is the flow of goods that are still going into Russia or not going into Russia. And what this line is showing you is it's known as high priority items. Basically, it's the stuff that is turning up on the battlefield that can be turned into weapons. So components from the UK that can get fashioned into drones and into weapon parts. And these were obviously banned from going into Russia. And when the invasion happened and those sanctions were imposed, you can see, look, the line of exports from the UK to Russia went down to basically zero. But here's what's striking. If you look at countries in Central Asia and the Caucasus, so neighbours of Russia, look at what happens of these same items. And these, as I say, are specifically items that can be used to make weapons. Look at what happened to them in that period, OK? So they were low, 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 and then suddenly they jump up dramatically after those sanctions were imposed, and now actually at a kind of a similar level to what they were going into Russia beforehand. This is specifically, I'll give you an example of the kinds of things we're talking about here. We are talking about, this is breaking down the kinds of things that are now flowing into those Russian neighbours that weren't before. Drone parts, telephone switching equipment, data processing machines, optical sensors, cameras, navigational aids. This is just giving you a sense of what has happened in reality when those sanctions were imposed. Now, like I say, this is just one side of it. This is trade. There's a whole range of other things. There's sanctions on oil, on energy, on individuals, and financial sanctions. And the head of the organisation that deals with all those financial sanctions specifically has just been up in front of the Treasury Select Committee. And one of the questions I'm going to show you now is from the head of that committee about how much in the way of fines have actually been imposed as a result of that. Listen to this.
Given the severity of the sanctions on Russia, which is, and that they happened the way they happened, would you have expected when all this started that you would have issued more fines?
I think the figure at the moment is lower than we would want, and we hope to have more cases come out that will present a more rounded, fuller picture of our enforcement action. I will certainly be very disappointed if we come back before you or another committee in a year's time and we've only got this £15,000 fine, because I think we would hope more of the caseload to have emerged and to have become public by then.
And then it's fascinating. I've actually spent quite a lot of time in the Caucasus and Central Asia over the last year or so, and their economy's doing quite well because these goods, as you say, are flowing through places like Georgia and what we would see is the stands, if you like.
That's right. In fact, we've been tracking not just the flow of goods, drone parts and all those other things, but also something you can track slightly more easily of the flow of cars. And when you look at how many cars, it's the same. We'll show you a similar picture here. The flow of luxury cars that used to go to Russia, mostly luxury cars, went to zero. And again, look at what happened after sanctions were imposed. They just went through the roof in other countries, particularly Azerbaijan. And we know that from Azerbaijan, they've been moved elsewhere as a result of these sanctions. They've been moved to places like Georgia. And what happened quite recently is we went out, you can see just kind of a representation of it here on the screen there. We went out to Georgia to look at whether those British cars are indeed going across the border into Russia, because obviously those figures suggest they stay in Azerbaijan and in the Caucasus. No, they do go over into Russia, so we have proof of that. But as I say, the striking thing really is, given that there has been so much evidence, given how big has been the scale of these sanctions that have been imposed on Russia, the striking thing that we've just learnt there from the Office for Financial Sanctions Implementation is so far only £15,000 of fines. In fact, that was just one fine have been levied in total over this period. Obviously, like I say, that's financial sanctions rather than this trade stuff. But still, it is perhaps a surprisingly small number.
Only on this, Ed, what's your take on how do we stop this? Or is it impossible to stop it? Essentially, are sanctions always going to be limited in what they can do?
I think it's really difficult, Darren, but I think that more attention needs to be going into where these goods are actually going. So what can you do with Azerbaijan, to stop those goods going in? Do you impose sanctions on Azerbaijan, on Georgia, on these countries as well, for that indirect flow of goods into Russia? But the awkward thing here is, well, we've just had the COP, haven't we? We've just had COP29 has just happened in Azerbaijan. You've got the government here, the Foreign Office, are desperate to try to cozy up to a lot of these countries to ensure that they come closer to the fold, to the Western fold. So it is awkward. But the upshot of all of this is that Vladimir Putin is able to support his regime and able to get weapons on the battlefield and able to continue to buy all of the luxuries that Russians rather like. And so the sanctions regime is certainly leakier than a lot of people might have hoped for.
Indeed. Great stuff, Ed. Thank you very much indeed for that analysis. Ed Conway there live for us. OK, all eyes are on the chief executive of Ofwat again this morning for a sign of just how much water bills will rise again next year. David Black, who was, of course, on this programme last week, has been questioned by MPs on the Environment, Food and Rural Affairs Committee. In the last few minutes, he's denied that regulation of the water sector has failed.
I wouldn't agree. I think it does show the case for the need for strong regulation of the sector, and it does show the need for the actions that we have that we've taken as a regulator in recent years to turn around performance of the sector. It's very clear the sector needs to change, and certainly issues around public anger over storm overflows, sewage discharges, concerns about companies' corporate behaviours very clearly signal the need for change.
OK, let's bring in our business and economics correspondent, Paul Kelso, who is joining us this morning. Paul, I put this point actually to David Black last week, effectively saying, we all know the water industry is a mess, let's be honest about it. And Ofwat have to take some responsibility for that, don't they?
Yeah, and he's faced that challenge. The reason that question arises is because the charge against the regulator is that for the last 2 decades, bills have remained flat. In fact, water bills are lower in real terms for customers than they were before privatisation. In that period, tens of billions of pounds have poured into water companies, but while sewage has poured into our rivers and infrastructure hasn't been improved, a lot of that money has flowed out in the shape of dividends and bonuses to executives, and public anger about this has increased hugely, particularly since COVID, when people were spending much more time in or next to bodies of water and not liking what they saw floating down. And the reason it's an issue today and right now for David Black and the regulator is we're 3 weeks just over from finding out what's called the final determination. That is the price that water companies are going to be able to charge us for water and sewage treatment for the next 5 years. So we're at the sharp end of a negotiation, a wrangle between the companies who say they need to be able to raise more money than Ofwat is currently allowing them to and charge customers more to cover the increased cost of that borrowing. That, of course, is deeply unpopular with customers who look at that money that's flowed out in the past and think they've paid for it already. David Black told the regulator that the water companies protest too much. They are actually, at the moment, still able to raise investment. This is what he said.
The sector remains an attractive prospect. Severn Trent Water raised £1 billion of new equity last year when it issued its business plan. And so there are evidence that we can point to of companies that are able to tap into markets, they're raising debt, they're raising equity, and that does suggest the sector remains attractive to investors. But it is a challenge in terms of a lot of the criticisms of the sector. That does unsettle investors. I think investors are looking at the sector with a fresh eye, and I think that does make it challenging for water companies.
That's something of an understatement from David Black to say investors are looking at the sector with fresh eyes, given the criticism. Thames Water is the embodiment of the problems facing the water industry. It is struggling to survive. All water companies, as a consequence of Thames's troubles and others, are facing increased costs to borrow money. Raising equity is harder because, frankly, why would you invest in a sector that is not giving you hugely greater returns more reliably than other parts of the investment landscape when you are facing the prospect of huge customer scrutiny and huge negativity around what is being produced by those companies. So we will find out in 3.5 weeks exactly how much bills will rise. One guarantee, they absolutely will rise across the board for everybody.
What a delightful Christmas present that will be, Paul. Paul Kelso, thank you very much indeed for joining us. Now, Donald Trump has threatened sweeping new tariffs on Mexico, Canada and China on his first day in office. Writing on social media, the US president-elect says he'll introduce a 25% tax on all products from Canada and Mexico and an additional 10% on goods from China, the United States' 3 biggest suppliers. So what effect could all this have on global trade? Let's speak to Matthew Stevenson. He's head of investment at services at the World Economic Forum. Matthew, a very good morning or afternoon to you. You're in Riyadh in Saudi Arabia. We have to talk, don't we, about Donald Trump and these tariffs, because inevitably it's going to have a big impact on trade.
Well, thank you very much for having me. And we think at the World Economic Forum that it's important to create a space for dialogue and cooperation in these complex times. And we aim to work with governments and companies to really find common ground and collaborate, even when the economic system is transforming. And I think that's some of what we see with the tariff discussion these days. And it is true that there are new challenges, but I think there'll also be new opportunities for countries and for companies. And so when it comes to tariffs, I think there are several ways to look at it. There's a short term and a long term, and then there's a US domestic perspective, and then there's also a foreign country perspective. So just to unpack it a little bit, in the short term, some US producers will be protected. US consumers may have to pay a little bit more. At the same time, US exporters may be importing intermediate goods that are now at a higher cost, and so their exports may go up. And that might lead to a slight loss of competitiveness. Now, if we look at other countries, then we really need to unpack the different effects at play. Some countries may be more exposed because they send more of their export to the US. Some countries may have a higher trade surplus. But it really will depend on the country, on the sector, and on the industry, because different goods will play out differently when it comes to the effects of new tariffs.
It will overall, of course, Matthew, and you're right about that. There's always winners and losers, aren't there, when it comes to global trade. But are we seeing the kind of, as some have suggested, the slow death of globalization, if you like, that essentially we are trading less and that's going to become more difficult in the years ahead?
Well, I think it's an interesting question about the multipolar world and the multilateral world. I've heard it said that the multipolar world is not a choice, but the multilateral world is a choice. I think one number sticks out to me, and that's in UNCTAD's 2023 World Investment Report. They found that when it came to investment measures enacted by developed markets versus developing markets, on the developed side, 53% of investment measures were more protectionist. But on the developing market, emerging market side, 83% of measures were more liberal or facilitative. So I think we are still seeing in the emerging world a desire to engage with international commerce, very much so, to open their markets to trade investment, maybe something that is being recalibrated in some of the developed policymakers' world.
But is in the end, though, you know, particularly for us here in the UK or in Europe, are we looking at a kind of quite uncertain, probably rocky periods for us economically, do you think?
Are we entering a period of uncertainty? Well, that's one of the big risks when it comes to business, of course, is policy certainty. There are many types of risks, but the one that we hear all the time, including in the discussions at the World Investment Conference where I am today in Riyadh, is the question of policy continuity, policy certainty. I mean, I think we're entering a phase where there's going to be new policies at play, and we'll probably see many economies react to those policies, react in the sense of there might be tariffs that are retaliatory or tariffs that try to avoid trade diversion. But I think there are some economies, as you say so well, there'll be winners and losers. There'll be some economies that may suffer potentially, but there'll be some economies that could benefit. And how could they benefit? I mean, one form is so-called tariff jumping foreign direct investment. So as tariffs in some places go up, there's an incentive to invest in those economies in order to avoid that tariff. And similarly, there can be relocation of production to economies with relatively low tariffs. So in those cases, those economies that receive the tariff jumping FDI, or those economies that now receive the shift in production, could potentially benefit.
OK, Matthew, appreciate your time joining us today here on Sky News. That's Matthew Stevenson there, the Head of Investment and Services at the World Economic Forum. Just going to bring you some breaking news coming into us at Sky News, and that is that an employee of the British Embassy in Moscow has been stripped of his accreditation, apparently for providing false information when entering Russia. This is according to the Federal Security Service. It said that his work revealed signs of intelligent activities. That is what the Russian authorities are saying, and so they have stripped his accreditation. He works at the British Embassy in Moscow. No sense that he's been expelled from the country yet. Just all we're hearing from the Russian news agency is that the Russian Federation have stripped him of his accreditation. We'll have more on that story, I'm sure, from midday onwards. Going to take a quick break, though, on Business Live for the time being. Coming up in just a couple of minutes, we'll be looking at the markets. How are they reacting, particularly to the Trump tariff news? The FTSE is down a little this morning. We'll have all the details after this quick commercial break.
Migrants risk their lives climbing aboard these trains in search of a dream, the United States.
It's really dangerous. They often get robbed on this train.
They suffer a lot by police, cartels.
What happens to them next, we just don't know. Do you miss your mum?
With Trump coming to the presidency, how much longer will people be accommodated?
The journey you've been through, it's been very difficult at times. Has it been worth it?
See.
This is a journey which goes by one name, the Beast.
I'm Mark Stone and I'm Sky's correspondent based here in Washington, D.C.
We'd been warned that we would meet people in the lowest moment of their lives.
Their story is one of fundamental American failure. Well, a slow drive for the president as he approaches his golf club, but I have to say there are more media here than there are supporters.
We love Trump!
I've witnessed the remarkable passion for politics here, but the anger too. This is just the audience that Joe Biden wanted.
Is this the moment to reform gun laws?
You know, it's easy to go to politics.
But it's important, it's at the heart of the issue.
For all the talk of a toned-down, humbled Trump, yes, maybe there was just a little less rhetoric, a little less divisiveness, but in the end it was the same rhythm, the same speech, the same man.
All them people that died in Russia and Ukraine, they'd still be alive today if Donald Trump was president.
If it was my wish, have a businessman that's strong like Trump, but maybe just doesn't say as much, you know?
We are under Israeli military restrictions in terms of some of the things that we can film, but it's important to be in there.
What we've been allowed to see over here is a humanitarian corridor.
Free wherever you get your news.
A young American medical student is making remarkable things happen.
I've seen a lot of difficult things, and honestly, it breaks my heart. These children don't deserve that.
I don't think there's a single Arab I know who isn't seriously disturbed by what's going on.
And so they gathered for this wonder of nature.
I'm very excited right now.
This is an extraordinary moment beyond anything I could have expected. Sky News, get the full story first.
Right, let's take you to the markets on this Tuesday morning, and there's been a muted response so far to Donald Trump's latest trade tariff threats, with only minor declines in Asia. The trade tariff talk has cast a shadow, though, over Europe as well, with, as you see, stocks down. I think car stocks have been particularly hit. The FTSE 100 also opens lower this morning, down 0.22%. On the currencies, the Trump announcement overnight helped send the dollar higher. Though sterling has made a little bit of room back on that. Let's speak to Hannah Couch-Peters, who is Global Equity Investment Analyst at Sanlam Investment. Very good morning to you, Hannah. Let's start with the trade tariffs. You know, it's going to be a big deal, isn't it? Day one, quite significant trade tariffs, not on us in the UK initially at least, but this is going to have a big impact on global trade. But the market seemed relatively quiet this morning.
Yeah, I mean, I think the biggest place you can see the evidence of the potential tariffs is in the underperformance of Europe versus the US market. And you've literally got the US market outperforming Europe by 23% this year. Europe is hitting all new relative lows against the US market. And I think if you look at the European market and the makeup of that, you've got companies like car manufacturers, for example, you've got spirits businesses that will be very heavily impacted. And so if you look at the likes of BMW, for example, I mean, they may get tariffs whilst sort of importing into the US. And also you've got the double effect also of proposed potential tariffs from China on a business like that as well. So that would have a huge impact on electric vehicles, for example. The share prices of these companies have been exceptionally weak leading into this. So, you know, I think a lot of this has actually already been discounted. Look at a company like Rémy Cointreau, for example. In addition to tax rises from France, you've also got those tariffs as well from the US. And so a company like that is actually down 70% from its highs. And so the impacts of these tariffs have definitely been felt in European companies.
OK, and we'll be looking out particularly for details when it comes to electric vehicles here in the UK. We're expecting an announcement from the government a little later on, potentially. Let's talk, though, about the London Stock Exchange.
Yeah, so I think that the London Stock Exchange is actually really interesting because a company like this is not impacted by tariffs at all. It's actually really a data company. It trades at a big discount to exchange peers. But if you think about the companies that we've been buying into and holding our largest proportions in our portfolios this year, London Stock Exchange Group is a great example because 80% a data provider. I think it's a bit of a misnomer that it's called the London Stock Exchange Group or was called that. But it has a fantastic exposure through its TradeWeb stake to fixed income trading, which of course has been, benefiting massively from the sort of the volatility in the fixed income markets. But in terms of its data exposure, this is very much a global business. It's called the London Stock Exchange Group, but it's only very, very small proportions of its revenues are actually generated from the UK. So when we're buying into UK or European businesses, it's important to look at those global revenue streams as opposed to be focusing on UK domestic businesses.
Okay, and just very finally, and quickly, if you can, just we're out of time, Hannah, just talk to me about the United Health Group.
Yeah, so again, that's really interesting. The stock was very weak at the start of this year because of the fears around what would happen on the US election and on healthcare regulations. The stock has moved up around 40% from March. I think, Trump government and the appointments in particular of Dr. Oz and Kennedy are going to be, beneficial for this company as it's biased towards Medicare as opposed to Medicaid. And it is the largest healthcare insurer in the US. It's got a target of 13 to 16% earnings per share growth, and it's trading around 4.5% free cash flow yield. So for those sort of growth numbers and the leading position it has as a vertically integrated largest insurer in the US, and we still think that it's a very sort of compelling investment option.